Welcome back to Market Day Report. I'm Tony St. James. Well, you've probably already heard by this point that stock market under pressure this morning, and it started a lot earlier today as first Japan tumbling to its lowest level since 1987. India seeing a big sell-off in their Sensex markets as well. We've seen this rolling across Europe as well, and now over into the Dow, NASDAQ, and S&P. Is it affecting our commodities, though? Let's jump into the corn market, where we're watching a penny lower trade on September in Chicago at 385.5. December is new crop. It's a penny lower at 402.25. And for soybeans, more of the same with that August front month 1021.5. It's down 7 3/4, 2.5 lower on September, and a couple of pennies lower make that 2.5 now on new crop November at 1024 3/4. We're watching soy meal and soy oil follow lower as well. Wheat market in tumble down 7.5 on the September for Chicago at 531.25, 6 3/4 lower on the D's. Hard red winter wheat doing pretty much the same thing, off 3 3/4 cents on both of the 2024 contracts. September at 556, D's at 572.5, and spring wheat in Minneapolis off over a nickel now on September at 589.25. December nickel lower 609.5, and in New York, cotton futures have been moving lower as well. October, I think just about 11 contracts trading, so 65.80 there. What we're really watching is the December, the new crop at 67.03, down 122. Let's dig a little deeper into the corn market as, again, we're seeing some levels last seen in October of 2020. Dewey Stricklers with Ag Watch Market Advisors. Dewey, starting with that corn market, again, finding some lower levels in there. What's happening?
Well, first of all, we've been in a long-term decline here in the corn and other grains for quite some time here. You might say that what's going on in the stock market, economic issues here are having some degree or effect on these markets here. But, we're looking at pretty much a benign weather situation, abundant stocks. The decline in grains, corn and soybeans especially, is getting pretty long in the tooth. Actually, I've got some cycle lows due here in a couple of days in soybeans. Corn, one due around August the 12th, which is the day of the crop report. So we probably, I think we'll, when I look at the patterns, we should start seeing these markets find some support. Obviously not today, maybe not tomorrow either, but very soon here.
And soybeans, looking at those new crop sales, 20-year lows, I think is what I read earlier this morning. So that's obviously concerning, right?
Well, yeah, I've had targets on these November beans around 998 for some time here, so we're getting closer to them.
We'll come back in a moment and dig a little deeper into the livestock markets. We've seen some pressure there as well. Livestock with Dewey as Market Day Report continues after this. This is Market Day Report, and livestock futures following the trend of everything else today, whether it's stock market and the equities, or whether we're talking bond futures or row crops, everything in the red. And live cattle, August contract 182.32, make that 181.97 off 212. The October down 352 at 178.55. For the feeders, the feeders actually up nearly 12% here this year, but we're well off of that. August down 482, 244.82. The September off 545 at 242.70. And the hog trade is lower as well, losing 80 cents on the August for hogs, 91.40. 217 lower on the October at 74.40. Let's bring back in Dewey Strickler with Ag Watch markets. And Dewey, what are you watching there in the livestock markets?
Well, it looks like it's coming apart here right now. You know, for quite some time here, Tony, uh, we've looked at the consumer has been tapped out. You know, you can look at the spending. You can also look at the credit card debt. It's pretty well maxed out. And of course, when those surprise and the unemployment numbers came out on Friday, that was more or less a coup de grace here for the cattle and the meats. Also, too, if you look at the choice select spread, we've has been gaining on the choice, in which the choice has been declining. So, you know, for a little while here, we have had the consumers have gone to those cheaper cuts of meat. So, you know, that's starting to weigh on the livestock market. It has gotten overbought. And, you know, if the consumer is tapped out, we see less demand here. You know, you could easily see this cattle market drop about $20.
You know, I was looking back at one of the charts on feeders and going back into 2014, 2015, we saw three peaks over that period before we saw pretty much a precipitous drop in the markets. Are we kind of replaying some of what we saw back in 2014 and 15?
I think we are to an extent here, especially if the corn market starts to find a bottom here. When you look at the commitment of traders report, the funds are heavily short corn. You got your commercial users; they are actually long corn, which means they're having a difficulty acquiring the physical product there, and they will stay long until they start acquiring the product here. So yeah, that could cause this market here to start gaining some traction.
From lovely Franklin, Kentucky, it's Dewey. Dewey, thanks for dropping by, and we'll talk again soon. Again, Dewey Strickler joining us here on Market Day Report.
Yeah, always good insight from him. I love hearing him. And I tell you what, some unsettling things happening in these markets. So
a lot of unsettling news.